So here we are looking at the hard copy version, which you have probably downloaded. Just before we move to the software version or the soft copy of this, I'd just like to draw your attention that even in the PDF version, these web links, the social media web links, and also the links to our corporate website and our toolbox website, and to this demonstration video itself, will still work on screen in your computer. So let's have a look at the software version, and let's just focus first of all on these columns across through here. If you look at the panels, the sales panel, the profit panel, the inventory panel, and the KPI panel, you'll notice that the sales, profit, and inventory panels are all based on financial year to date. Most retailers measure their KPIs and their performance in a year-to-date format, and of course so do most suppliers. You're probably more than familiar with this. So we're basically looking at the comparison of this period this year compared to the same period last year. And that runs across all three of these panels. So all of these three panels, whether it's sales, profit, or inventory, are measured this period this year compared to the same period last year, as you can see in this row here, which tells you how those formulae are calculated. In the case of the KPIs, however, they are usually annualized. And in this case, this particular retailer uses a rolling 12-month figure. I'm sure you know what that is. That is basically, if we move to July of this year, we add in the July figure for 2014 and subtract the July figure for 2013, so that we're always working with annualized figures. Your retailer may give you these data in this format, which makes it quite straightforward for you to enter them into a spreadsheet such as this and work out the metrics. Okay, so let's move from here. Let's actually put some numbers into this one. Let's go to an example, and this is actually a working copy. And you will receive, if you download this soft copy version, you will receive an example such as this one and a blank. So you'll receive a blank and an example filled out, and both of those templates contain quite a large number of drop-down cell comments to make things easier. For example, the planning periods, as we've just been mentioning, are covered here. The metrics are explained here. And this row here gives you indications on the units or the method of calculation. And as it says here in the cell comment, you can hide this row once you're familiar with these ways of working and these numbers. Probably what's important to note is that there are only three columns in which you need to enter data. All of the orange columns, as you can see from the formulae entered in here, are calculations. So you would enter retailers' sales out through scan, your sales in, or the retailer's cost of goods, and stock levels, depending on how they're given to you by the retailer. Most retailers would give you their stock levels in cash, in which case you need to make sure that they've been valued at cost, not at retail, if you want these metrics to work properly. So three columns of input data, formulae in all of these other cells, which give you insights into how they're calculated. They're pretty straightforward if you think about it. And this one here is taking this cell here in relation to this one here. It's fairly straightforward if you think about it. It's just a percentage growth figure. When you get across to the KPIs to the right-hand side, the formulae get a little bit more complex and a little bit more difficult to explain in the form of a drop-down box or a cell comment. For those of you that would like to drive down into a little bit more detail, let me just magnify the sheet and show you a couple of examples of, I guess, the quality of the comments in the drop-down comments and the formulae as well, just to give you an idea of the training content, if you like. It's almost a training course in a spreadsheet. Simple things like percentage growth in sales, percentage growth in GP dollars. But there are also some fairly explanatory comments about the differences in terminology between GP dollars and GP percent, or margin dollars and margin percent. It does confuse some people. Some of the best salespeople in the world, for some reason, have a bit of a blind spot when it comes to markups, margins, and stock turns. So what we've done here is we've built in some fairly self-explanatory statements in these drop-down boxes to clarify exactly what each term means. It's quite a useful review and refresher of your financial metrics knowledge if you're selling to retailers, wholesalers, or distributors. Let's have a look at some of the formulae. Some of them are simple, as you can see here, but when we get across to the KPIs, they're a little bit more involved. This is GMROI or GIMROI, and this one is stock turn. The week's cover figure over here is actually very simple because it's related to the stock turn figure. So you can see that the formulae in this section of the spreadsheet are actually fairly complicated, and if we had put cell comments through these cells here to explain in detail how those metrics and KPIs are actually calculated and what they really mean, we would have finished up with cell comments that were bigger than the spreadsheet and obliterated the whole screen. So we haven't done that. It's not really feasible to put detail in there. What we have done is put a cell comment in here to alert you to that fact and suggest where you might go for further information. Elsewhere on this toolbox site, for example, you will find in the very near future an ebook on retail finance. There already are Q&A checklists on retail metrics which will help you refresh your skills. Keep in touch with us through social media, watch our blog, follow us on LinkedIn primarily, and perhaps Google+. In the near future, we will commence a series of webinars for key accounts and consultative selling. So before we leave this short demonstration, I'll just return us back to the left here because there are a couple of things here, one which is obvious and one which is less obvious. The one that's obvious is that this is a spreadsheet, and therefore it's quite simple for you to insert, in fact, as many rows as you wish. Quite readily extend the spreadsheet and simply copy the formulae down and make it as big as you require. That is fairly obvious, given it's a software spreadsheet. What's less obvious is that I've hidden some cells here, and we call this quick GMROI. For those of you that are familiar with GMROI, you will know that the correct formula for GMROI is annual GP dollars divided by average cost of inventory during the year. There is a quick way to calculate it, and it's actually markup times stock turn, not margin times stock turn, not margin or GP, which are these figures here, but markups, which are these figures here. Taking the margin figures and converting them to markups, fairly straightforward formula. Some of you may know this. And taking the stock turn figures from here will give us the GMROI figures here, which, as you can see, correlate with the GMROI figures there. So we call that a cross-check. It's a neat little formula to make sure that your GMROI figures and your GMROI formula is correct. That's really an overview of this soft copy version of the retailer KPI chart. We hope you found that useful, and we hope that you'll download this soft copy. Good luck.